employers need to consider several factors before deciding to pay for individual health insurance plans, from costs and tax implications to legal requirements and employee preferences. Navigating this benefit option can be complex. In this video, I'll go over a better type of employer-sponsored health benefit that allows you to reimburse your employees for their healthcare costs instead of paying premiums directly. How business owners can pay for individual health insurance plans. Historically, organizations could pay for employees' individual health insurance premiums directly. However, the Affordable Care Act changed this. IRS Notice 2015-17 clarified information about employer payment plans and whether employers could pay for employees' individual health insurance plans. Because the IRS and ACA consider EPPs group plans, they must meet ACA standards. Since EPPs can't integrate with individual health insurance plans, they don't satisfy the ACA. Offering an EPP could subject you to fines if you have 50 or more full-time equivalent employees. Thankfully, federal law allows employers to reimburse employees for their monthly premiums for individual health insurance policies, as long as it's done through a compliant health reimbursement arrangement. This allows employees to choose a health insurance plan that best fits their individual needs, while still receiving financial assistance from their employer. How an HRA works. HRAs aren't as complicated as they may seem. Here's a breakdown of the HRA process. The employer sets aside a specific amount of tax-free money for each employee. Employees pay for medical expenses such as health insurance premiums, co-pays, and other healthcare services using their own money. They submit proof of those out-of-pocket costs to their employer for reimbursement. Once the employer or third-party administrator approves the expense, employers reimburse employees up to their allowance amount. Common types of HRAs. There are two types of HRAs that businesses can offer to reimburse employees for their individual health plans: the Qualified Small Employer HRA and the Individual Coverage HRA. The QSEHRA is only available to employers with fewer than 50 full-time equivalent employees. All W-2 full-time employees are automatically eligible as long as they're covered by plans that offer minimum essential coverage. With the QSEHRA, employers can offer different allowance amounts based on whether the employee is an individual or has a family. The IRS also sets annual limits for contributions. There are no annual contribution limits with an ICHRA. It's also available to employers of all sizes. With the ICHRA, employers can offer different allowance amounts to different classes of employees based on job criteria, such as full-time and part-time. They can also differ allowances by family status. Employees need their own qualifying individual insurance plans to participate in the ICHRA. How HRAs benefit employers. HRAs are employer-friendly for two reasons. They offer tax advantages and work with all budgets. Under an HRA, reimbursements are exempt from payroll taxes for employers. Employees also receive tax-free reimbursements. Plus, unlike a traditional group health plan, an HRA isn't subject to unpredictable rate increases or strict participation requirements. With an HRA, employers can take care of their employees while staying within their budgets. By offering a QSEHRA or an ICHRA, employers can reimburse employees for their individual health insurance coverage on a pre-tax basis. To learn more, you can read our article on this topic. We've provided a link to it in the description. If you're an employer looking to provide employee benefits, PeopleKeep can help. Our HRA administration platform makes it easy to set up and manage personalized health benefits in just minutes each month. If you found this video helpful, be sure to give us a like and subscribe to our channel for more employee benefits and small business tips. Thanks for watching.